Hey investors, my name is Gustavo and this is the channel Building Financial Freedom. So what I got here today, so that's my last video of the year of 2023. So what I'm bringing to you here is 2 ETFs and 12 individual stocks that I would be buying if I would be opening a brand new investment portfolio today. So I do have all this in my portfolio already. I will show you my numbers by the time right now, but like I said, if I would be starting my investments today, those are the 12 stocks I will be buying, right? 12 stocks and 2 ETFs. So I will be showing you here, like I always tell you guys, this is not financial advice. I don't want nobody to buy anything because you're seeing my numbers or anything else. But I'm here to show my numbers, and like I always say, I always put my money where my mouth is. So I'm not gonna be here telling you, oh, this or that, and I'm not gonna show that I am doing it with my own money. And that's the purpose of this channel, is show you that anybody can do it. All right. I don't want nobody to copy my portfolio, because everybody has different goals and everybody has it's different. So I cannot have the same wallet as you do, and you cannot have as the same I do, but I bring you my numbers and I bring some names here that you can do your own homework, right? Like I show you what I'm doing, and if you like it, you do your own homework and see if it works for you. So I will bring it here. It is how much? Yeah, 12 stocks in 6 different sectors. So 2 per sector and 2 ETFs. So we'll start with, the bread and butter, or the rice and beans, or the lettuce and tomatoes, which is the S&P 500 ETF, VOO. So this ETF follows the S&P 500. This is the less, I would say, stressful stock or ETF you can have, because it's the less volatile, right? It's so many big companies all together, which makes go up kind of slower sometimes, and makes go down way slower too. So if you're not, if you like to be safer, right? S&P 500 has a history of over 100 years of, more than 10%, increase per year. So if that's a good number for you, which I think it is, if you don't want to risk yourself or make more or just lose more, that's a great start, right? You buy ETFs, very inexpensive to own. I think 0.03% per year. The fee is very, very, cheap, the fee, compared to the service. You just follow S&P 500 and you keep going. So I have this. I bought I don't have for long. This is only 2 shares. I buy this in a different account that I showed here before, which I buy $7 of this ETF every day. I start, I think, in August. When the 6-month close, I will show you, all the numbers I track every week. So, but I buy this in a different account on Webull every day. But in this account, I have 2 shares, have a little over 4% in gains. So the first ETF that I will keep buying, and I would buy if I was opening a brand new portfolio today, VOO. The second ETF, SCHD. This is a Schwab Dividend Equity ETF. So they have good, dividend payer companies, and they kind of switch it then, depends on the performance automatically. It's very nice. People love this one. I have 22 shares of this. Will give me a little over, almost 4%, which is today is at $76 each. So VSHD, those 2 I buy, like I said, on the different account that I had a video here on the channel. If you want to go there, that I said I would be buying both $7 of each one of them every day, and I'm tracking this weekly, and I'll be showing you guys when the 6-month come. So the 2 ETFs I'll keep buying, and I would buy today if I was opening a brand new portfolio: VOO, S&P 500, SCHD, the Dividend Schwab Equity. So those 2 ETFs. So let's go the next. Oh, the tech sector, technology, man. They are both of these stocks. They are close to the 52-week high, which people think when they get close to the 50-week high, it's too much. But for me, for the numbers I'm looking for, they're still undervalued. Even this first one went up 200% this year. Meta is up 200% for the the year. It's all the way up at $356.63 right now. It's December 29. The market's about to close in 4 hours, and it'll be the final close of the year. That will be it. So it's all the way on the 50-week high, but for me, still a lot to grow. You know, it's people saying it's overvalued, but the numbers are going through it still undervalued. So I will keep buying Meta, and I would buy if I was opening a brand new portfolio today. So the second one, the same situation, Google. It's 141 per share. It's all the way up close to the 50-week high, but still under my, still undervalued. So I have 23 shares of Google. I will keep buying Google, and I would buy today if it was a brand new portfolio. So the two tech stocks, Google and Meta. I'm really high on Meta here. I really kind of have a lot of exposure to Meta, over $6,000 at the moment. Cost me $4,277. I'm 41% on Meta, but still lots to go. Like I said, Meta and Google are my two tech stocks I will be buying. They do not pay dividends. So let's go. Consumer defensive. What we got here is consumer defensive. Coca-Cola will be my first one. Same thing. It's on a way, far from the 50-week high. People, I don't know, this hurt big time this year. Lost, for some reason people are selling Coca-Cola like crazy. And we are kind of at the moment showing very undervalued stocks. Good payer of dividends, actually a great payer of dividends. So I have 51 shares. I will keep buying Coca-Cola. I'm a little over 1%. It's just start buying these not long ago. So Coca-Cola stock I will keep buying, and I would buy if I have a brand new, account. On the consumer defensive too, they kind of look like almost the same, but PepsiCo. This one has a lot of line of drinks and snacks. Also 169 is kind of far from the 50-week high, and right now these two stocks are good dividend payers, good dividend growth. They are pay dividends forever, and they are showing very undervalued at the moment for the consumer defensive. Pepsi and Coca-Cola, I have both of them, and I'll keep buying them. Now I'm gonna go the industrial sector. Those two I'm bringing industrial. They're both close to the 50-week high too, but they still have room to grow, man. I like those a lot. So the first one, Snap-on. They make those little computers that can check vehicles. It's inside the artificial intelligence too. So they're going big on in race cars, and like we think it's just a little computers for cars only. No, they do for industrial equipment too. They're big and they're growing a lot inside the artificial intelligence side. So it's 289 each one, really close to the 50-week high, but still for me a great buy. Snap-on's my first industrial sector one. The second industrial sector one also close to the 52-week high. Boom, Caterpillar. Great buy at the moment. Great dividend payer. Also does those big truck engines. Those big tractors you see in construction. Those big yellow ones, CAT Caterpillars. So a lot of diesel engines. They're big. They have lots of room to grow. I know 295 is really close to the 50-week high, but in my numbers that I'm looking for, Snap-on, Caterpillar is two great industrial sector stocks I would be buying today if I had a brand new wallet, a brand new portfolio, but I'll keep buying because I do have some already. So here we go. All right, financial services. I have one at the all-time high and one very, very undervalued. Like way, far from the 52-week high. The first one's the PayPal. This one doesn't pay. It's kind of like a fintech one, not like a bank, but they're both in financial services sector. They don't pay, no dividends. And this one, $61. It's way far from the 52-week high. PayPal has lots to grow. Has we think PayPal is just a little PayPal signal to see when you click it when you buy stuff online. No. They have Braintree, which is a great, those company do credit card services. Like if somebody swipe a card, that vendor needs to pay a little fee for the company. Braintree is a huge company behind PayPal who does this, you know, they're all over the country, so they're making good money. New CEO who came from Intuit. Also, you know, it's a lot of things going on there, and that's a, you know, even $61 still, like I said, way, you know, far from 52-week high. And even looking to all this coming, it's a great buy at the moment. PayPal, I have 53 shares, and I'll keep buying those. Now the second financial one, this is a big dog on the all-time high, paying good dividends. Boom, JP Morgan Chase. So if that huge bank issues ahead, you know, this year, the small banks got destroyed. People love banks. The money needs to go to a bank. Who are you gonna go to? The big boy, the safer one, right? So JP Morgan got a lot of traction when that happened. Those little banks breaking apart. So JP Morgan was able to get some good piece of the pie. You know, a lot of capital went into JP Morgan Chase. 170, it is a very, you know, it's all-time high to that, you know, all 52-week high, but still lots to grow. You know, JP Morgan, I think, is, you know, go for the biggest. It's the safest way, right? But those are my two financial, JP Morgan and PayPal. Those two, I have it, I'll keep buying, and I would buy if I have a brand new portfolio today. So, now let's go to the REITs, guys. REITs, I love it. Real income. This is the, you know, everybody loves the real income. Everybody is the preferred REIT for the entire country, right? Pay monthly dividends, a good dividend payer. It's there for such a long time. So I have 35 shares there. They're almost 8%, you know, on my money. But I will keep buying those. I like real income. They are also one of the biggest, you know, REITs out there. And I'll get my exposure to these guys here next year. But the next one, this I really like it. Vici. They own like those casino properties on the strip. They own bowling alleys. They own golf courses, but they don't own none of this business. They own just the properties. And they're on the, I don't know if some of the REITs can tell, they have 100% of people rented. They don't have no vacancy. They, you know, the business who rent their properties are great business, making great cash flow. So I think that's a safe place to be. So Vici, I have 64 shares. I almost, you know, 7.20% increase on my shares. So my two REITs that I have it, that I'll keep buying, and I would buy today if I was starting a portfolio, would be Real Income and Vici. Those two great dividend payers. Like I said, this one, Real Income, pay monthly. People always like the monthly dividend payer. And this pay every quarter, but still really good, like great numbers. Vici is great numbers. Right, what to get? Oh, healthcare for last. What to get healthcare? Two big boys. They're also far from their 52-week high. They're kind of, you know, they was punched so much this year. First one is definitely a big boy. One's the top S&P 500 companies. United Health Group. They make a lot of, you know, partnerships and everything. They, you know, 527 people. Oh, but that's $527 a share. We don't have to worry about that. It's a high number, yes, but you can buy $1, $5. You know, like I use Fidelity here. Fidelity allows you to buy $1 for anything. So you can just transfer your money for a checking account to there and make a purchase of $1 and you buy a fraction share. So you buy 0.000. They don't care. You have to start buying. That's like the main thing. Is I'm not trying to start buying any of this. I'm telling you, start buying whatever you like it. You know, that's the thing. Start it. First step after you start sending money to, you know, your exchange and start buying, it's amazing. You see the numbers growing up. It's so nice. So here we go. United Health Group. That's my first healthcare sector that I'm buying. The second one, you know, that's a forever Johnson & Johnson, man. Great dividend payer. Dividend growth for over 50 years. You know, $156 per share is far away from the 52-week high. For some reason, this company was hurted so much this year. So right now looks very undervalued. I have 13 shares and I have a little over almost 2.5% increase on my shares. So these two companies, I think, is a great buy at the moment, which will be United Health and Johnson & Johnson. So those are the 12 companies and 2 ETFs that I am buying. I will keep buying next year. and I will be buying, if I start a portfolio today, those will be the stocks I'll be looking for. Like I said, some are really on the all-time 52-week high, but still a great buy for the numbers they're looking to bring in the future. No stocks never what they are on, like they're worth it today. It's what they're going to be worth it in the future. So by my studies, I'm looking, those are great buys. So I'll be buying. I'm not telling nobody to buy anything or sell anything. I'm not financial advisor, but like I said, this channel is to show you anybody can do it. My money is always where my mouth is. I never tell anything here that I'm not doing with my own money. That's my goals, my numbers. I'm not telling nobody to copy what I'm doing. If you want to grab some stuff that I have here, do your own homework and then do what you want, right? So I thank you guys so much. I just started this channel not long ago, and I'm here to say to you guys, Happy New Year. A lot of health, peace, great investments. Wish all the best for you guys. So I'm new here. This channel is just start crawling right now. And if you guys can help me out, share with your friends. You can click it here to subscribe to the channel, and click it here. I'll leave a video for you. I don't know which one yet. I will check for the best one. So here's a new video for you. Check it out. Here, just subscribe to the channel. Help me out, guys. Thank you so much. Happy New Year, everybody. And I wish you guys all the best. So thank you. See you next year. Bye.